Bitcoin price movements are becoming bigger and bigger. There is like a threshold at which Bitcoin crosses this, and now it is like the new gold. In terms of price, I would say that threshold is probably somewhere at I don't know, maybe 500,000 per Bitcoin, maybe 400,000 Bitcoin. Somewhere there is where we start becoming the second largest asset class on the planet. That's when you start to shift and think, okay, I need exposure to this. I'm willing to dump my gold and buy some of this after the dollar starts to hyperinflate or devalue even more. Because you have to imagine at that threshold, like, what does the world look like when Bitcoin is $500,000? It's a very different world than today, right? It's not 80, 90, 100, 108. It's a very radically different world. And I think people miss that mindset that things change as Bitcoin goes up in big chunks, like 200. It's a very different world.
Today, we're analyzing the powerful, forward-looking thesis of Jan3 CEO Samson Mow, who argues that while the market's reaction to recent U.S. policy has been muted, the groundwork has been laid for an unprecedented supply shock. He contends that the U.S. government's recent moves have effectively eliminated the career risk for other nation-states to adopt Bitcoin, creating a global game theory scenario where everyone was waiting for the U.S. to act first. Mow believes this is the critical, unrecognized catalyst that will eventually ignite what he calls the Omega Candle, a single-day price move of $100,000, as the market is forced to confront the brutal reality of Bitcoin's absolute scarcity.
Subscribe to Daily Bitcoin Trends for expert insights, real-time market updates, and proven crypto strategies. No hype, just smart analysis to help you make better decisions in crypto.
From 200, 500, you just have to, double plus a little bit, right? And then from 500 to a million, it's just a double. So these things become more likely the higher we go, because it's not like we're 10xing, we're just doubling from 500 at that Veblen threshold. The US is seemingly on a track to recovery from financial mismanagement, let's say. I don't see the same happening in Europe and other places. They're all sort of in denial, but at least the Trump admin has sort of recognized the problem. That's why they're trying to stop the death spiral. That's why they've implemented the Department of Government Efficiency. This is why they're trying to lower the 10-year rates. They realize that the debt is unsustainable. Inflation is a symptom, and something has to be done. And they're trying these other things, but Bitcoin is the only solution that will fix these things. So, yeah, to answer your question, yeah, it's a bit surprising the US was the next big one. I thought we'd have another big country, and that's kind of what we've been trying to accomplish at Jan3. But what we've encountered is just everyone wants to wait for the US, and there's just a lot of fear of career risk. And with this shift in the US landscape, I think there is no more career risk. And that alleviation of the fear about doing something with Bitcoin, it just hasn't made its way around the world yet. Many Bitcoiners were expecting, like, we're going to get an Omega Candle right now with the EO. But I think you need some massive change before that is going to happen, like retail coming in or normal people understanding Bitcoin, and or even just the action of buying either from the US or other countries. And that hasn't happened yet. The EO is just sort of news, and it's not well understood, and the impact is not well understood. So yes, the adoption of Bitcoin in the US is a direct threat, and it's not even about Bitcoin at this point. Like, the US is also looking to push stablecoins in a big way, and it looks like Tether is going to be a part of that. So what does that mean for Europe? I think they should be far more concerned about stablecoins, because the barrier to understand a stablecoin is far lower than Bitcoin. So imagine you can go to any merchant with your self-custodial wallet, pay the merchant in a stablecoin, and that's fully outside of their control. Like, they can't really police that. Maybe they'll try. They'll go more draconian, more authoritarian, but it won't work. And the CBDC won't work either. So yeah, I'm just not sure what's happening in Europe now, but it doesn't look good for sure. Yeah, so the Omega Candle is a 100K candle. The Bitcoin price movements are becoming bigger and bigger, and people are not always aware of these movements, but 100K daily movement relatively soon. And 100K is just, 10x. Bitcoin has done 17x in the past with a totally different macroeconomic landscape than today. Like zero Bitcoin national adoption, no strategic Bitcoin reserves, no talk about issuing Bitcoin bonds, and no talk about buying a million Bitcoin from the US. So it's completely within the realm of possibility that you get a 100K candle soon, maybe this year. So I think that the biggest thing is the Omega candle is saying be ready for this when it happens because things are changing very, very rapidly.
The core of Mow's analytical framework is the impending demonetization of gold. He identifies a crucial psychological and market cap threshold, likely around $500,000 per Bitcoin, where the digital asset will be worth roughly half of gold's total market value. At this point, Bitcoin's meteoric 16-year rise will be in direct, undeniable contrast to gold's multi-millennia history, forcing a global reevaluation of which asset is the superior store of value. This will trigger a massive capital rotation from gold into Bitcoin. This event will not occur in a vacuum. It will happen in a radically different world where the dollar's value has collapsed further, and the only viable financial lifeboat for many is their holdings of gold, holdings which they will then be forced to trade for Bitcoin.
There is like a threshold at which Bitcoin crosses this, and now it is like the new gold. And I think we're already seeing an inkling of that with the executive order to create the SBR. But in terms of price, I would say that threshold is probably somewhere at I don't know, maybe 500,000 per Bitcoin, maybe 400,000 Bitcoin, somewhere there is where we start becoming the second largest asset class on the planet. And people can kind of directly compare gold at the top with, what is it, 20 trillion and Bitcoin with, half of that. And I think at that point you start to demonetize gold because, you have this new thing that is surpassing that 1,000-year monetary technology in 16, 17, 18 years. So that's when you start to shift and think, okay, I need exposure to this. I'm willing to dump my gold and buy some of this. And maybe gold is the only valuable thing a lot of people have left after, the dollar starts to hyperinflate or devalue even more. Because you have to imagine at that threshold, like, what does the world look like when Bitcoin is $500,000? It's a very different world than today, right? It's not 80, 90, 100, 108. It's a very radically different world. And I think people miss that mindset that things change as Bitcoin goes up in big chunks, like 200. It's a very different world. You are seeing the coins on exchange decline, right? And I think it'll just accelerate now with more corporate buys. And if there are nation state buys, like with Cynthia Lummis's bill, then that's just going to accelerate. And I don't think everyone fully understands the 21 million limit, right? Because we've grown up, when I say we, I mean everybody, we've grown up in a very fiat world where there's always wiggle room, right? With a fiat economy, you can always fix your mistake. Okay, like in Canada, maybe we spent too much on vaccines. Now we, print some more money. And printing doesn't necessarily mean money on a printing press. There are so many ways to print money, right? Issuing debt or monetizing debt. But, you can fix your mistake, right? We messed up. Well, we'll fix it. But with Bitcoin, there is no recourse. Just like you can't roll back the Bitcoin chain if there's a theft, right? You just can't print more. And that reality has not yet hit the general populace that, okay, there is only 21. And that number is dropping rapidly. They don't know. Like, there's just never been anything like this before. Like, maybe gold, but still, like 2% inflation a year. And it can increase if there is demand. So it's like a different beast still compared to Bitcoin. And it takes a lot of going down the rabbit hole to really understand that ultimate scarcity, that it's just like hitting a wall. No one will help you get more Bitcoin. If you break down the Bitcoin pie, like maybe like 3-4 million coins might be lost, right? Maybe 5 on the higher end of the boundary, but a lot of coins were lost. You can't look at Bitcoin at the lens that you're looking at it today and understand that, people 10, 15 years ago understood it the same way. A lot of people just didn't care or yeah, they just lost it and threw away the hard drive. And there's a lot of that. And that brings us down to, maybe 15, 16 million coins available. And Michael Saylor alone has taken off all the coins to be mined this year, maybe twice, maybe more. And then you factor in any other significant buyer, and you get a multiple of that. So it's likely that Bitcoin is already deflationary, right? Everything that is mined is not adding to the supply. So there is really little Bitcoin left.
Ultimately, Mao's thesis is an urgent call to understand the profound and unforgiving nature of absolute scarcity. In a fiat world, he argues, there is always a bailout, always a way to print money and fix mistakes. With Bitcoin, there is no recourse. The 21 million supply cap is a hard physical wall, a concept so foreign to the modern financial mind that it remains dangerously underappreciated. When you account for the millions of coins that are permanently lost, the available supply is far smaller than most realize. As institutions and nation-states continue their relentless accumulation, Mao concludes that we are already in a deflationary state, where demand is systemically outstripping all new supply. The Omega Candle is not a question of if, but when.